Well, good morning, Tony Virtue speaking, Virtue and Partners, with our regular monthly update. A pretty warm day here in Manly, as you can see. Look, the main thing to talk about today, I guess, is coronavirus and how that's impacting on markets. By way of contrast, I spoke literally 2 weeks ago when the markets were at an all-time high, and I did say that a 5 to 10% correction would be quite normal. This is not an abnormal set of circumstances, and to some extent, market momentum can move markets 5 to 10%. From what we can see at the moment, the China situation is beginning to resolve itself. We are seeing infections going down in their area. We are seeing their manufacturing starting again. Obviously, it's a huge task. Once you quarantine effectively 12 million people who are major manufacturers who are part of the supply chain, particularly into Australia, well, that's an incredibly debilitating effect on an economy. And, the reality of these things is it's safety first. You have to kind of do more than what you possibly needed just to make sure something doesn't go wrong. By way of contrast, 300 deaths overseas at this stage, mainly in Italy, of all places, Iran and South Korea. I'll just read you something. China now has a population of 1.43 billion people, where over 250,000 people lose their lives on Chinese roads each year, and around 60,000 people are drowned, yet the death toll from this virus is 3,000. So we're having to look down then. But my point being is that it's not really so much the actual deaths, it really is a type of influenza, it is the impact on the economy that is really affected things. So in a coordinated effect to support the markets, there's a global meeting, and we dropped interest rates 0.25%, the Americans by 0.5%, the Hong Kong 0.5%, Canada 0.5%. So the net effect of that was to make the risk-free rate lower, and in many cases negative. Now, really what we need to do is to have much more targeted fiscal policy, if I can say that. So you really need to support things like the education sector. As you know, I teach in the university system, so I can see firsthand the impact on Chinese students. Things like tourism. So you need to be targeted. Just dropping interest rates is a very sort of blunt instrument. And okay, if you want to keep buying investment properties, but really from an effect of the economy as a whole, it is very limited value. As such, we're expecting the Australian government early next week to come out with some stimulus package. And once we know what they've got to say, I'll be back and talk to you about that. Now, as you can see from this graph, artificially low interest rates is not helpful. And the graph shows just how much cash is being held around the world at the moment for a rainy day. So I look at Japan, 60% of their assets in cash, and that's kind of a negative rate at the moment there. So it's a pretty unproductive set of circumstances. How did the market react? Well, these things are a bit of a seesaw. We've been up and down 1,000 points overnight over the last 3 or 4 nights. It will take a little bit of time to settle down. Intuitively, there will be some industries affected, particularly travel, particularly anything to do with education. Now, most of our education institutions are public institutions, so it kind of shields that. But still will impact on the secondary market there. That said, the GDP for the quarter to the end of December was actually up 0.5%, so that was better than what we expected. So look, the best way I think to read this is we just let things play out. I think what's happened in China, to a less extent South Korea, will work its way around the world. And typically 2 bad quarters, so 3 to 6 months of fairly negative growth is to be expected. And then the question then will be how quickly can we recover from there. Not a lot of point in trying to sell something in this market. If you do, you've got to then think about buying back. And if you even execute that well, then it becomes a habit for future times, and eventually you won't. So generally here, we're taking a very, very cautious view. We're just being careful. People are very calm. There's not an awful lot of increased activity in the business. Clients seem to take it in their stride, and we'll just ride this one out. Now, if there is something significant, I'll get back to you in the next week or two. And in the meantime, we've been through this so many times before. We have an incredibly experienced team. So good wishes to you all from Tony Virtue, when experience pays.
you.